Let's talk to Ricardo. He is from ActivTrades. Very good morning to you, Ricardo.
Morning, Nick.
I guess as an economist, a man reporting about the markets, this is a pretty exciting time, isn't it? History being made in so many different areas. Let's kick off with the Turkey situation. How does this end?
Well, we're seeing that the Turkish side is taking some measures, albeit just political measures, not actual structural measures that will, in the long term, steer the economy towards a safer path. We still notice a clear avoidance of raising interest rates because President Erdogan is firmly against it. But he's imposed some restrictions on short selling in the lira. He has some friendship, some friendly lending of a hand from the Qataris yesterday with the offer of $15 billion in investment. So all of this has somehow stopped the bleeding, at least temporarily, and we noticed something of a rebound. Where it's all going to end, well, difficult to say exactly what's going to happen, but from what I hear and from what I see, I would probably agree with most analysts in the sense that this is not the end of the storm. This may be the eye of the storm. Right. So new developments may come along. President Trump announced that even if the pastor that's been held in Turkey is released, all the restrictions that have been imposed on Turkish goods will be maintained. So this leads us to think that this crisis is here to stay. President Erdogan as well, or rather the Turkish government, has raised tariffs on several American goods like American alcoholic drinks, tobacco, etc. So I can see that we may be going through a period of slowing down in the rhetorics and intention, but it's likely that at a certain point it will bubble up again.
Dollar strength, 13-month highs. I think we've just sort of fallen back a smidge. Is this set to continue?
Well, interestingly, today we saw something of a slowdown for the dollar after having hit highs yesterday. Well, it's interesting to see that President Trump's policies are having a perverse effect if one considers what he set out to do. Because one of his main points in terms of economic policy is to weaken the dollar. Exactly, he said repeatedly that the dollar is too strong. So what is happening, which is the dollar assuming the role of the safe haven per excellence at the moment. Is going against that, but on the other hand, is not giving the world a chance in the sense that he keeps firing up quite flamboyant statements through his Twitter account. He keeps creating tension with his commercial, with imposition of tariffs on imports from Europe, from China. With the situation in Iran, etc., and all of this then mixed in with the economic policy of the Fed, which is divergent with the other main central banks. They've been raising interest rates. This makes the dollar very interesting for investors, more interesting, for example, than gold, which is not yielding any rent when compared to what the dollar is giving at the moment. So the current dollar strength will probably continue if tensions keep escalating.
Well, 10-year money, risk-free, I'm getting 3%, right?
Exactly.
Okay, so let's talk about the euro-dollar. I've had a number of sort of people on this week. The chart looks a dog to me. I know which way I would be. I would be short. What are your thoughts on that?
Yes, I mean, the euro is facing a number of headwinds at the moment. We have the situation in Italy, which could end up playing a crucial role in the next few months. Even yesterday, we saw Mr. Salvini, who is the de facto leader of the Italian government, the leader of the very strongly right-leaning movement Lega, he was saying that Europe is somehow responsible for the tragic event in Genoa where the bridge collapsed, because Euro budget setting restrictions are causing poor maintenance of public infrastructure, which, I mean, some people could see that as a shameless gaining of political capital from a tragedy. But nevertheless, he didn't hesitate and he do it, which also signals that he's clearly opposed to Europe. Also this morning, I heard an interview with Ian Duncan Smith, one of the strongest advocates for a no-deal Brexit, and several times he mentioned that there's tension building up within the European camp, and that he's been to Italy recently, and many people told him they were not happy with Europe.
Yep.
So we could see that there's a lot of potential there, also with Eastern Europe as well, not playing ball. Danger in Scandinavia with a far right rising in Sweden. Although these are not parts of the Eurozone, they can create tension within Europe, and that will have a repercussion in the confidence that investors will feel towards the euro.
Brexit no vote, Great British pounds. I've seen two hedge fund managers suggesting that the pound cable could get down to 121, and one of the guys even said down to 115. Obviously, the chart's starting to look really quite weak. How would you play that currency pair for the rest of the year?
We have to wait until the end of next month, the end of September, early October. There's sort of a roadmap in terms of expectations. So I think for the moment, the level of risk of a no-deal Brexit is priced in, considering where we are in that roadmap. So if we get to October and still there's no agreement regarding Chequers plan, for example,
Yep.
If there's still disputes within the British camp, or if the European sides, the EU side rather, decides that they're not really happy and broadcast that loudly, then we can see the pound taking another fall. I would probably agree with many analysts that can see it, as you said, going down to 120, 115, and if by the end of the year there is no clear resolution in sight, we could see it approaching the levels it hit straight after the Brexit referendum.
On that joyous note, Ricardo, thank you very much indeed.
Thank you, Nick.